Let's say, I don't know, very conservative. $400 6 months from now, $500 a year from now. However,
Mhm.
we do have a long-term view that as more and more transactions move on chain, and our view that um, virtually all financial transactions will take place on chain, and that chain will be Solana, then we have a forecast and a presentation on a $10,000 per sol price.
In this portion of the video breakdown, I want to play some video clips from systemically important organizations or representatives from systemically important organizations, the likes of Morgan Stanley. We have industry leading experts from Citi that are going to be speaking to you. And we have one of the biggest stats for Solana also speaking to you guys today, going over my personal bullish outlook for Solana. I've recently become in this market downturn very optimistic on Solana's price long term. And having missed out on buying Solana sub $100 in the past, I'm taking extreme advantage of the current environment and opportunities that exist now, not financial advice. I've been accumulating Solana heavily underneath of $80 and will continue to do so as long as price is underneath of $80. Even if we do go lower, I'll start to continue to dollar cost average even heavier into Solana tokens. So starting off here with this recent announcement at the end of July, this coexisted with something that Morgan Stanley said in this panel discussion. Excuse me, I keep saying Morgan Stanley, a representative from Morgan Stanley. Reading this first, just to show that institutions are bullish on these assets long term, it says here Figment, the largest non custodial institutional staking provider, has been selected by Morgan Stanley Investment Management as a staking provider for Morgan Stanley Ethereum Trust and Morgan Stanley Solana Trust, which begin trading today. The funds are the first spot Ether and Solana ETPs from a major U.S. bank affiliated asset manager to include staking from day one. Both funds integrate staking at launch, with an anticipated 95% of staking rewards passing through the shareholders. MSSE generally intends to stake 50% to 80% of its ETH holdings and up to 100% of its Solana holdings. Although these amounts can vary, more meaningful details are available in Morgan Stanley Investment Management's press release, right? So this is just huge, a massive announcement at the end of July surrounding Solana and institutions wanting to gain access to staking. Now, if we come over here, this is the On-Chain Brokerage Summit and a fireside chat with Morgan Stanley's Chris Larkin. This still only has 46 views, was uploaded 2 days ago. I played this video clip for you all the other day, but just to reiterate, considering that Morgan Stanley just announced this July 28th, listen to what this guy says here about having a portion of your portfolio allocated to crypto.
Where we've got research to back up our recommendations so they can give a proper, uphold their fiduciary responsibilities. As you think about sort of asset allocation, responsibilities. As you think about sort of asset allocation, we don't have a specific view yet, but I would say that imminently you're going to hear an announcement of our viewpoint on cryptocurrencies and the allocations for it. Without a doubt, I would say that we do believe there is there should be a portion of a client's portfolio that it's reasonably it's good reason to believe that you should have some portion of your portfolio in Bitcoin. That's a big, and again, I think that's a big move for the industry, not just for Morgan Stanley, but you're going to see a lot of these other money management firms saying the same thing, that there's sort of there's a place in the person's portfolio for cryptocurrency.
And what does that mean for people that maybe aren't so familiar with advisory? When a firm can advise that a portion of your portfolio can go into crypto, does that mean that everyone's portfolio eventually holds crypto, or what does that mean in practice?
No, I think as you go through, every client's got a different risk tolerance in the way that they want to think about it. So it's really just the idea that, like, I think it's sort of I think to me it's like, if you think about bringing something from an asset allocation standpoint, is that this is something that's here to stay. And this is not about Bitcoin or Ethereum, because in the end run, like, whether these are the winners or losers of the space, it doesn't really matter. It's just the fact that these cryptocurrencies or tokens that are available, there's going to be a place in the portfolio. That will evolve over time as well, right? There'll be more products that'll come, that the innovation will not stop where we are today. But I think to me, it just sort of, once again, sort of solidifies the idea that this is here for the future.
So what I really like about this is he specifically says that in the near future, not only are they, Morgan Stanley, going to announce what they think a client should allocate towards specific digital assets, but that more asset management firms are going to start to do the same thing. And this is a recent video breakdown. This on-chain brokerage summit literally happened just a few days ago. So imagine those announcements coming out end of this year, 2027, where asset managers that previously had this on the sidelines perspective, not allocating to crypto, are starting to come out, and they're going to start telling not only their investors how much they think they should allocate to crypto, but imagine 100 different asset management firms saying that, hey, you guys can now allocate 5 to 10% into crypto, what that's going to do for the total market cap long term, right? When these institutions really start giving the green light to their clients to start allocating into the digital asset ecosystem. So considering that recent announcement, July 28th, that also aligned with what this dude said here, that now is the time to start to allocate. And that leads me over here to what Marshall Hayner said here. He said, truly, I say to you, financial freedom is coming for those with ears to hear and eyes to see. Well, I just showed you guys that Morgan Stanley is providing products for their institutional clients to earn staking rewards on Solana, where they're going to stake 100% of its Solana holdings, not 50, not 20%, 100% of their Solana is going to be earning yield. And we right now have the opportunity on the Metal platform to come over here on Loan Protocol and earn 6% on Solana just for lending it out and letting it sit there and literally compound the rewards every single day, whether it's you compound it in loan or whether it's you swap the loan out and buy more Solana and compound it. Again, now is the time to really start to think about your financial future 3, 4, 5 years from now. So I found that to be something of interest, how we have a platform that is regulated, that is, compliant with huge regulations. And here we have the ability to earn 6.53%. And if you want to lend it out and borrow against it, you can actually even get paid to borrow against your Solana. Personally, I don't recommend lending and borrowing strategies unless you're an expert at doing so to mitigate, your liquidation risks. But if you're just lending out your assets and earning yield, it's one of the smallest ways to, expose yourself to crypto while also exposing yourself to the upside and exposing yourself to constant daily yield. Obviously, of course, assess your own personal risk. I'm not telling you guys to go out there and deploy on this platform, but it's a platform that's regulated that allows us to align ourselves with, what's going on and what institutions are currently doing. There's probably many other platforms out there, but personally, I only operate on regulated DeFi protocols. Now, coming over here to this gentleman, Joseph Anorti. Hopefully I'm pronouncing his name correctly. Who is this guy? He is the CEO of DeFi Development Corp, which is the first non-Bitcoin DAT in the United States. They are a specific Solana DAT, digital asset treasury company, with over 2.2 million Solana, according to this AI overview on a simple Google search. I don't know if this is accurate, but it's still a massive amount of Solana. 2.2 million Solana tokens, right? Valued at around 167 to 174 million dollars. So imagine earning 6.65% on 167 million dollars. That is a lot of daily revenue. And if they're just compounding that, this company in the future is probably going to be a multi-billion dollar, if not trillion-dollar company, right? And so coming over here and listening to what he said in an interview, Joseph Renanti, DeFi Development Corp, on the Solana Treasury Playbook, listen to what he says about what he thinks Solana's price is going to be in just 6 months to a year from now, and then his longer horizon term outlook. Listen to the prediction that he gives for Solana's price.
And Joseph, what's your projection for Solana's price 1 year down the road?
1 year.
Let's break it down into 6 months and a year.
Oh, geez. Let's say, I don't know, very conservative. $400 6 months from now, $500 a year from now. However, we do have a long-term view that as more and more transactions move on-chain, and our view that virtually all financial transactions will take place on-chain, and that chain will be Solana, then we have a forecast and a presentation on a $10,000 per sol price.
Okay, so he just said $10,000 per Solana, right? And right now, Solana's price is about $75, I think, right? 72, $75. So that means $7,200 investment in 5 to 10 years from now could be worth $1 million. I'm willing to take that bet, and I'm willing to multiply that. So I'm stacking a lot more Solana so that I need way less than 100 if it ever goes to 10,000 to make $1 million, right? That's just my personal opinion. Again, not financial advice. Shout out to the UN podcast. I don't know. I've never come across this podcast before. Some of the researchers shared some of their videos, so I took a peek at it and watched this video all the way through, stuck around to the end, and I was like, dang, that is a crazy price prediction for Solana. That means 100 Solana tokens, if this guy's prediction comes into fruition, excuse me, would make you a millionaire, right? Long term. That's obvious, of course, before taxes. Now, what I find interesting about this is on the same podcast, we have another gentleman here. This gentleman, his name is Ronit Ghosh, probably butchering the crap out of his name, but he works at Citi, still presently to this day. He is the global head, future of finance, strategic advisory, CXO engagement, and thought leadership, all right, at Citi. And if we come over here, we know 5 months ago, so at the very beginning of this year, Citi, they completed an internal proof of concept tokenizing a bill of exchange on Solana. What that proof of concept demonstrated from Citi is the full lifecycle execution and issuance of financing, distribution, and settlement, smart contracts, automated business logic, all processes that typically take days to complete. They were completed in minutes. And it says here, this is a concrete step towards issuing and settling short-dated trade finance instruments entirely on-chain. And the reason why I'm showing you this announcement from Citi from just a few months ago, from the beginning of this year, is again, remember what this guy said, this dude from the digital asset treasury company, his short-term projection on Solana 6 months to a year from now is a $500 Solana token. In years to come, a $10,000 Solana token. And you're probably like, that seems very unrealistic, right? Very outstretched. Well, remember, JP Morgan just announced that they're going to be earning yield on their Solana and allowing their clients July 28th, 2026 to invest in Solana and stake it. We mentioned this guy sitting on stage saying that, hey, look, almost every asset manager is going to start to come out with numbers that they're willing to allocate and allow their clients to allocate towards crypto. And we had this from the beginning of the year. Well, listen to this guy, Roni here. Listen to him say how much money could potentially come on chain. And this is the dude from Citi. So take a second here and listen to what he says.
Private markets has kind of lacked for some time now.
Yeah, we've just put out a report called Tokenization 2030 on this topic, where we've argued that this decade, by 2030, you're going to get a multi-trillion-dollar tokenization market. By tokenization, we mean putting financial instruments on a blockchain of some sort.
Okay, so now listen to what he says about how early we are in all of this. All right, take a second and listen. This is pretty crazy.
I think, first of all, the range, the quantum of that range is so great. Say from 2 to 30, it's 15x. That gives you a pretty good idea of how early we are in this process. And it's a cliche, almost a meme to say this early, that's early. In our report, one of our external subject matter expert contributors sort of said, on a scale of 1 to 10, we're 1 to 2 in terms of where we are in the journey to tokenized markets. I think they said we're 1.5. And I put that quote early in the report we published a few days ago because we are very early. What we talk about in the report in terms of the growth areas coming out of public equity, this is all predicated on developments underway right now with DTCC, with NYSE, NYSE, NASDAQ. These pilots and projects are happening in 2026. So it's still super early. And the same on treasuries. We're arguing in our report that the second driver after public equity is going to be US treasuries. It's super early in that journey. So the question really becomes like how quickly we get a broad-based market. Is it 2028? Is it 2027? Or is it back-end loaded? Is it more like 29, 30? And because this is uncertainty, because we're just so small here, and we've had so much 3, 4, 5 years now of talk on this topic and relatively small volume, and this creates the big range. Now, why listen, we're not at anywhere close to the 20 or 30 trillion number, right? We're at 5 to 6. So how do you get to the 20, 30 trillion number? Part of it is just a reflection of how big financial market side. That sounds uh, like a odd thing to say, but most people who don't work in financial markets, who work in, say, quote unquote, the real economy, sometimes lose track of or they don't have an idea of how big financial markets are and financial flows. And if you put a small percentage of these financial flows on chain, you get these very large numbers. So just throw some numbers out there. US public equity, for a ballpark, 75 trillion. US Treasury, government debt, 30 trillion. So if you just add those two things, public equity and public debt, government debt in the US, you're looking at over 100 trillion of pretty liquid assets. And that's just the US. The US economy is about 30 trillion into the GDP. Now, of course, US companies are the biggest ones are truly global, right? The Microsofts, the Googles, the Nvidias, these are global companies. So you can't just look at US GDP, but people look at the GDP number and go 30 trillion. Or what's global GDP? About 100 trillion now? And then you go, financial assets are 500 trillion, right? And once you start putting those on chain, now, I think public assets go on chain.
So just to give you guys a perspective on, the realistic targets long term, he mentioned where they think we are right now and those trillions of dollars coming on chain out of a 1 to 10, and we're a 1.5. So these numbers that the gentleman projected of a $10,000 Solana, I never really thought that it could go that high. My personal projection target for Solana long term was like 1,000, maybe $7,000 on the high end. And you guys know I don't do bullish Moonboy price predictions. I'll just wait for it patiently and earn yield on it while I wait for it to get there. But still, nonetheless, it seems a bit more realistic when he's talking about hundreds of trillions of dollars coming on chain and digital assets in the market, just getting a small portion of that. Looking into the future, a 30, $50 trillion market cap, and maybe Solana's market cap is 500 billion to $1 trillion. It's very plausible for those things than those numbers to come into fruition. And I'd rather play my bets now that that's going to happen rather than look back years to come and say that I was unwilling to take the risk when it does. So not financial advice, of course. Make sure that you guys always do your own personal research. I found all that to be interesting. Citi at the beginning of this year running a pilot with Solana, and this dude talking about hundreds of trillions of dollars from Citi coming on chain, mentioning that we're in early days. We got a dude giving a price prediction year from now, $500 Solana, 2030 agenda, $10,000 Solana. That would be crazy. That's literally like the easiest investment of all time. You put $7,000 into the market right now to get 100 Solana and then wait 5 years for it to potentially become $1 million. And then 5 years from now, if it's not $1 million, I would go outright and still say it's probably going to be much higher than what it is now, either way. So win-win to me is the way I see it. Anyways, not financial advice, right? Many blessings to you guys. That's all that I had for you all today. Hope you guys enjoyed this brief breakdown. Remember, just go and do your own personal research. All these video clips and all these panel discussions can be found inside the CYPRX Discord in the research section. Shout out to the researchers for sharing them. With that being said, enjoy your week.